Gaurav Dua is now joining us. He handles the PMS at Sharekhan by BNP Paribas. Gaurav, afternoon. Thank you so much for your time. Let's start our chat on this unsecured, lending side of the business. You grow, 5-star, SBFC, a bunch of guys doing very good numbers last few quarters, and I'm seeing some of them flow out in this quarter as well. But the fear is that asset quality may come at risk now, and hence the valuations have got depressed in that area. Is it an opportunity to build in portfolios, or still you will stay away from this side?
So, the fact that some of these states have already started to announce loan waivers is something which is like this concerning the market, because if you are exposed to the micro finance industry, or you have a high exposure to this unsecured loan, this basically spoils the whole borrower attitude basically, and this has been this is one of the this kind of hangover. Apart, you know you are kind of margins, which is a board. You have seen in most of the banks, private sector banks, actually come down. Their cost of funds are just likely to go up, and that I think is one of the additional distinct concerns on this NBFCs.
So, what is your biggest position right now in your portfolio? Just want to understand the thesis which you are taking, 2 or 3 big positions. Just want to understand the thesis, with the caveat that obviously this will not be taken as buy sell recommendations, but just to understand your stance.
So, we are a multi-cap fund, but unlike most of the multi-cap funds, we are not very, very aggressively allocated towards small caps and this micro cap stocks, because we have seen that 80-90% of the strategies available right now in the market have anywhere between 70-80% to small cap space, whereas we are a well balanced this thing kind of allocation. Anywhere between 40 to 55% is always in this thing large caps. That is primary strategy this thing that we have. So we are much less less this thing volatile. In terms of our allocations, we have been very, very aggressive in terms of industrial engineering companies, capital goods company, power companies for last this thing 2 years. But in this past few months, we have been gradually taking some of the profits this thing from there, and we have been increasing allocation to ID sector and to select this thing staples, this thing consumer stocks, which we believe are now going to lead the rally for at least a year or so. That has been change in our strategy.
So you are expecting, okay. Oh, that's interesting. You have actually made some entries into low value retail counters. That's a brilliant point. I want to scratch it more, because I've been analyzing that perhaps the case is building that the lower end of the K may start outperforming the upper end of the K, which has done very well last 2-3 years. Is that the reason you've got into some of the value retail names?
Yes, actually, what you have seen, in past 2.5 years or more, rural distinct demand, or the demand at the this affordable space, have actually been weak. However, whatever we hear from the industry companies, that there are clearly signs of a pickup there. That is what we hear from HUL, Daburs of the world, and that is where we believe that there are stocks available at the right price and right this thing valuations. Moreover, we think that this thing consumer is a structural story. What you are going to see is that the basically household income is going to more than double over this 5 to 8 years in India, and that's the space where we feel that there are going to be a lot of multi baggers that will be available at the right price this for the investors.
Right. How significantly do you think the earnings could actually improve for low value retail in the coming quarters?
So, these are the spaces where the growth will be kind of a double digit kind of growth. Stock to stock is going to differ. But what we think always is you should get into those spaces where there is scope for basically consensus earning estimates getting upgraded. So we this thing feel is that this is the space where the consensus estimates are still low, and you have this scope for upgrades. You always make money or this create alpha in these spaces where you will see earning upgrade, whereas you will not make alpha in spaces where the earnings are at risk. That's a this line of thought that we have.
M&M numbers have come in 2600 crore PAT versus 2760, slightly on the lower side. Margins also come up on your screen. Stock has taken a knock actually. Income from ops 27,000 crore odd from 24,400, again on the lower side. But the stock is at 3,000 bucks right now. Gaurav, have you looked at what's your positioning in the auto space? Do you like names like M&M which have a EV angle also, or something else? What do you like here?
We are holding M&M for a long time now. We entered M&M at around this 800 rupees, and the whole basically change in the strategy of the group is what attracted us to the stock. And they have been actually say, working on those lines, and it has started to show in their numbers results. One distinct quarter here and there is not what or will affect us. In fact, their this farm equipment is likely to do much better now. So this we'll be holding on to the stock. Tata Motors is also a stock that we are holding in this space uh, in terms of OEMs.
Gaurav, what's your thought on the entire market exchanges, that infrastructure, MCX, BSE, or even some of the brokers which are listed, or CAMS and KFintech? They're very excited today. What is your positioning in some of these market infrastructure related stocks? Do you have any exposure there, and what's your thoughts?
In fact, we were there, and we have actually exited these stocks about month and a half back when we saw the regulators, both SEBI and RBI, are extremely worried about increasing exposure of small investors on the FNO space. Now that's something which will obviously would hurt the business. So we have been away from the stocks, but yes, we had entered some of these exchanges about uh, about this year and a half back, and have made a substantial amount of money there.
Right. All right, Gaurav, we'll let you go on that one. We